So, gold has just blown past its all-time high, and you know what that means. Your social media feed is probably flooded with two kinds of people. The ones saying, "I told you so," and the ones asking, "Is it too late to buy?" We're going to focus on that second question in this explainer.
Right, and this is the million-dollar question, isn't it? It's what keeps people up at night. You see your price chart going vertical, and you're either kicking yourself for missing the boat or you're fighting that urge to jump in right now. So what's the deal? Is this the top or just the launch pad? Let's break it all down.
Okay, before we even think about strategy, we've got to get our heads straight on what gold is really about. It's not a get-rich-quick scheme. Think of it more like a fire extinguisher. You hope you never have to use it, but man, are you glad it's there when the smoke alarm goes off. And let's be honest, those economic alarms are definitely ringing right now.
So what exactly has got everyone so nervous? I mean, this isn't just some random blip on the chart. Nope. There are three huge global forces pushing gold sky high. Let's dig in.
All right, number one, inflation. It's not just that things are getting more expensive. It's the fear that your money is becoming worth less. That's a killer for most investments, but it's historically been a great environment for gold. Then you've got number two, the talk of lower interest rates. I mean, if your bank account is basically paying you zero, then a gold bar that also pays you zero suddenly looks a lot more competitive, right? And finally, number three, and this one's a biggie, just look at the state of the world. Wars, insane levels of government debt, political drama. So yeah, smart money is looking for a safe place to ride out the storm, and gold's been that place for, well, thousands of years.
But listen, here's something that almost everyone gets wrong. That record high price, that's not the real story. The real story is the signal that price is sending. That's what we really need to pay attention to.
And here it is, plain and simple. A super high gold price isn't really about gold being so amazing. It's about our regular old paper money getting weaker. It's like the whole world is taking a vote, and they're voting no confidence in the dollars, euros, and yen in our wallets. Let me give you an analogy. Imagine you're walking down the street, and every single store is completely sold out of umbrellas. What's your immediate thought?
Exactly. You're not thinking, wow, umbrellas must be a fantastic product. No way. You're looking up at the sky and thinking, a big storm must be on its way. And that is precisely what's going on with gold right now. It's the world's financial umbrella, and a whole lot of people think it's about to pour.
Okay, so now you get the why, but that leads to the how, right? How do you actually own it? And maybe even more importantly, how do you do it without getting totally wrecked? Because there's a massive, massive mistake people are making as we speak, and we need to tackle that first. So you've got two kinds of people in this market. On one side, you have the chaser. This person is glued to the screen, heart pounding, absolutely terrified of missing out. You know, that classic FOMO. They're the ones who inevitably buy at the very peak. And then you have the planner. This person is calm. They've been watching, they have a strategy, and they're just patiently waiting for their moment.
And that right there, that's the difference between being an amateur and a pro. Smart money doesn't chase things. It plans, it has a system, and it follows that system even when their gut is screaming, buy now.
So what are the actual ways to do this? Well, first there's the old school way, physical gold. You know, actual bars and coins. This is the gold standard, no pun intended, for long-term protection. But you got to store it somewhere, and it's not like you can sell it in 5 seconds. Then you have paper gold, usually an ETF. This is super easy. You can buy and sell it from your phone, but there's something called counterparty risk, which is the tiny chance the company behind the ETF has problems. Finally, there's the high-octane option, actively trading it with things like CFDs. This is pure short-term speculation, and it is incredibly risky. And why is trading so ridiculously risky? One word, leverage. Let me break it down. Say you've got $1,000. Leverage lets you control like $10,000 worth of gold. Now, if gold goes up just 10%, boom, you've doubled your money. Amazing, right? But if it goes down 10%, you're wiped out. Your money is gone. It's a seriously sharp double-edged sword. So, how do you handle that sword without, getting hurt? It's all about your mindset. You have to ask yourself, am I trying to be a trader or am I an investor? Because believe me, they are playing two totally different games on two totally different fields.
Look, a smart approach here isn't about having a crystal ball. It's just about discipline. Let's run through the rules real quick. Never go all in. Pretty self-explanatory, don't bet the farm. Wait for pullbacks. Let the good opportunities come to you, don't chase them. Use small position sizes. This keeps your bets small so one bad trade can't sink your ship. Have clear stop losses. This is your eject button. You decide when you're wrong before you even get in. And my favorite, trade the trend, not your emotions. The trend is your friend, your sweaty palms are not.
Okay, but let's be real. Does this mean gold is just going to go straight up forever? Is it a sure thing from here?
No way! Not even close. In fact, you should absolutely expect it to drop sometimes. No market ever, in the history of markets, goes up in a perfect straight line. Pullbacks are healthy, they're normal. But here's the key. A little short-term turbulence doesn't mean the plane is crashing. The long-term story is still intact.
And what is that long-term story? It's actually pretty simple. As long as governments keep printing more and more money and going deeper and deeper into debt, an asset that nobody can just print out of thin air, well, it's going to look pretty darn good. It's just basic economics.
So at the end of the day, you've just got to decide which team you're on. Are you an investor, using gold as a shield to protect your wealth for years to come? Or are you a trader, using it as a sword, trying to score a quick win? You can win with either, but they are not the same thing.
So what's the right move for you? Honestly, for the vast majority of people out there, the answer is crystal clear. Trading is a brutal, full-time job that requires nerves of steel. Investing, though, is a long-term strategy that just about anyone can use to protect what they've worked for.
All right, let's bring it all back home. That big, flashy record-high headline you see, don't think of it as a starting pistol telling you to dive in. It's more like a flare being shot into the night sky. It's a signal that something is not quite right with the global economy.
Yeah, it's that canary in the coal mine. It's a reflection of all the fear, all the inflation worries, and all the uncertainty floating around out there. And it tells you that a lot of people with a lot of money are starting to get really, really nervous.
And maybe that's the most important thing to understand about gold. It's not a tool to get you rich overnight. It's a tool to help you not get poor, slowly. In a world where the cash in your bank account is losing a little bit of its power every single day, gold is one of the very few things that's held its ground for centuries. And in times like these, well, that's something to really think about.